Alright, you guys, I'm going to make a quick 10-minute video on how I use the volume profile to see the supply and demand zones or areas on the chart. So basically, the supply and demand is a really good strategy, and you really must know where is it at, because that's the only way you will be able to locate where buyers and sellers are creating a lot of pressure, which is basically one of the best strategies that I love using, besides key levels and indicators, right? But I do use a lot of supply and demand and key levels for profit taking, and also seeing where there's a lot of potential institutionals are buying, which is basically the difference from retail traders to institutionals. Because institutionals, you're able to see where they're buying shares. Obviously, I'm an option trader, so you want to be able to see where are they buying the shares, and they're basically buying the dip, and that will increase a lot of buying pressure or selling pressure, which you really want to know in order to have a higher chance of a move either to the upside or to the downside. This allows us to actually get more profits and sizing less and making more, which is what I really like using, especially for small accounts. And you're able to hold longer instead of trying to get faked out or not knowing where the trend is taking you, and actually using less indicators just by using the volume or where buyers are located at, right? So basically, I'm pretty sure we all know what volume is. Volume is the basic volume that we have indicator, which measures how much buyers or sellers are in at the time. So if we go to the 5 minute, sorry about that, I'm still kind of sick. 1 minute or 5 minute volume, right? You see that is rising up. Obviously, this is the time by bar. What we want to see is the price. We want to see where there's more buyers and sellers by the price, which will give us our levels to see where there's more selling and buying. So volume, this is good. Obviously, we need it to see if there's increasing volume and if the chart or the stock is still going to keep going up crazy or down, same way of both sides. So now let's get going. I'm going to tell you guys what is the volume profile and what does that mean, so you guys won't get confused. So basically, what is the volume profile? The volume profile takes each price point and tells us how many transactions has happened at each price point. The longer the bar is, the more transactions happen at that point. So we can say the traditional volume is the volume by the time, but the volume profile is volume by price, which I was explaining earlier. POC is the line that you see when you get the volume profile. That's showing you the point of control. So the point of control is the highest volume node. A node is basically this, a bar, right? Volume node on the highest volume node on the volume profile. The point of the control POC is the longest volume bar on the volume profile. That means there's a lot of volume transactions there, meaning there's a lot of buyers or sellers depending on where the POC line is located at. Traders use POC as support and resistance, or at an important retest point. So on TradingView, I have the paid version, but I'm gonna show you guys how to use the volume profile on the non-paid version if you guys have the non-paid. But I use the fixed range volume profile, right? So we get into this one. Let's see. Let me go back. Volume profile. Actually, not even volume profile, range, because I use the visible range profile. So I'm gonna try to use this one. I think it was this one. Yeah, there you go. So on the volume profile range, when we go to the daily, you'll be able to see that. Let me try to fix this. Bar multiplier, bar length. Okay. So let's see. Hold on, because I'm trying to fix this up, but I don't remember which one that I used earlier, because they have two different versions. Let's just switch to, because I usually use the regular visible range volume profile, and I'm pretty sure it was either this one. There you go, fixed range. Okay, so it's called volume profile fixed range by lonesome. All right, volume profile, you look it up on TradingView. Let me type it up. Volume profile by lonesome, right? 8,000 people right here, volume profile. We put a star so I can show you guys how it looks. So on the volume profile, right, we want to see the highest node, which it already tells us right here. This one's pretty nice. It tells us the POC, which is the area of control. 188.33, the area of control. for NVIDIA, right? So let's go back on a replay, a couple days. This is the daily time frame. I'll probably go back before this range started, right? So probably a week back around there. And you see right now it's showing us the volume from this day, from where it's catching usually the range from here all the way to here, which is all the way from March 22nd to today, or the day that I had replays. So I went back in time. That's what the replay button does. So we're back here, right? Let me move the mic a little bit so you guys can hear me more clear. So we're trying to see what the volume profile is. We want to see where the most volume is at, right? So you can see how it spikes up, just like how the volume works. It dies out here and then it starts spiking up. We want to see where there's more volume in order to find an area of supply and demand. That means that could push it up all the way up, exactly like how you use volume. The same thing, right? So if it goes sideways, imagine if it breaks around this level without having any of this. Let's say this was at the bottom, if it breaks above here, it's gonna pop all the way here. This is when volume starts dying out. But maybe seller in control or buyers, which that's what you gotta see. Price action. So let's put this back on. Let's go to the settings here at the volume profile for the inputs. And let's put the roll size, maybe I'm gonna put it at 50. Let me see how that works. There you go, 50. 50, the roll size will be nice. You saw how there was more volume, more time, which is what we want. So I have the volume profile roll size at 50. We're on the daily, that's all I switched. Obviously you want to change the color, you can put it white, the PLC line yellow, so to you. So I'm gonna leave it as is. So as of here, I want to see where's more volume, right? So you can see that from this area, you can see the volume spike around this range, right? So what I like doing there, it's basically putting a horizontal line where it started, where the spike of this volume started going up. You can see that around here, this is where the range died out from right here, right? Well, let's put a level. I'm gonna put a monthly blue from right here to there, and this is where it dies out, right? Then from here, it continues to go all the way to the bottom where it had started, right? So we have a level there, another level there. But on this section, you can see that around this range, from here, once it hit that 136.84, you can see the price here, it started creating volume, right? More increasing pressure, which is what you want. Usually what I do there is just put my area, so between the bar, I put my area of supply, just to see where that is, and then that's basically all we have right now. Besides here, we actually have another area of demand. You can see how there was a volume spike around this area where buyers are trying to get in, so we could probably put a demand level there for now, right? Because it's really close around that bar. But then from here, volume increases and it drops. So we could put one right here, right around these little two squares to kind of put an area of demand. And then there you go. These are our areas of supply and demand. I'll put demand here, then demand there, and this is supply. All right, so then there you go. That's our bigger time frame. The supply that we have, demand. We see how it works out. It ends up breaking, it drops down, right? A lot of pressure. So now let's see, let's take this off. Let's take all of this off, and then we go to the 4 hour, right? We're around this range. I took off the candles, and in the 4 hour, we do the same thing. We turn on our volume profile, and we want to see where the PLC, and this is where we do our levels. So you start noticing that above this area, right, above 130.66, you start seeing pressure of volume, right, building up. So you can put that at a key level. PLC is already there. It starts breaking down here, and then it's up there, right? So 1, 2, and 3, and then volume dies out, and then right here starts emptying out, right? Same thing here. Look, a lot of volume all the way to where around this section, right? So there you go. We have our levels from there. This is dead volume, and maybe we could put one right here before it dies out, right? So this is what allows us to see, like, okay, this is supply and demand. Demand, usually this is what we want to see. You guys took my class, we talk about how this level works. You want to be able to take it, like if it drops down, buyers will come in, try to do whatever it wants here, and then try to do this, maybe break it, and then if it holds this area, it's going to try to hit the next demand or it's a supply zone, and then break and keep going, right? If it doesn't break, then obviously it'll come back down and start bouncing around this area to make it more simpler. So that was a 4 hour. We go to the 1 hour to see how that looks. So far, it has a lot of buying pressure, right? Let's turn on our candles and look how those candles worked. Let's take off our visible range. Let's just use candlesticks and look what happens. As long as it held, it went back inside demand, right? You could have bought it. Look, this gray shaded areas, gray shaded. You can see how buyers come in aggressively, and those levels are used really nice, especially on the 1 hour. And if we go to the 15 minute, which I like using a lot of 15 or 5 minute, you can see how it holds that demand. So if you start getting in, okay, once it gets above that blue level that we had, remember that we drew, look how it's holding it. It held it, so you could have done it like, okay, you know what? We're going to get a position. Our exit is going to be around here. We could get a long swing all the way to 126, maybe 3-4 contracts a week out, right? And you could see how you could held the whole time. The next day, it stopped around this area. As long as it holds 126, then you could hold it. So far, obviously, you could see another level, another key level here at 123, so you could put it there. Obviously, by this is what we're doing through the day. So you can put another key level here and see how that works, right? We saw it once and look, it goes up, rejects, comes back down. Obviously below this one, it goes straight down. But look what happened. Buyers still held this position. So you could have taken some profits below that 121. Take profits. It went from 118 all the way to 123 or 121, right? That's a good move. That's at least, let me see how much percentage is that. Oops. That percentage is, at least in contracts, is over 300%, right? So from there on, and we're playing weeklies, but you play the weekly, what happens? You can still able to buy if it holds this blue level again. You could see a reversal candle. You could get in this one, obviously on demand. Take it and do the same thing, and you could repeat it. Look, repeat it. Take your contracts here, reject it, get off below that level, right? Using your risk management like this. Below it, you get out, and there you go. You go to taking profits. Same thing the next day. It's still above demand. What happened the next day at the open? Pumped up all the way to 123. Good amount, right? Same thing. Look, it pumped up on pre-market. This is pre-market. It held it. It opened above this key level, and then it broke, and it kept going straight all the way to where our supply is, which is this one. This is our supply because it's red, right? So now look how this works. This is all in 1 day. 1 day keeps going. Look the levels, how they worked on the volume profile. Not too many levels. Should know that if it holds this area where the supply was, right, it was rejecting, but then it broke out. Obviously it broke out. You can see the candles coming in, broke out, and then it held this position. And now what happened here? This supply became demand because now they're taking over this area of 126 and 129. So we can put our demand here. See that? So then what do you expect here? It's a supply, so you could be careful and be like, okay, we might drop because sellers are at 136.84. Let's fast forward and look at that. Dropped all the way to 132 and kept going. So now let's fast forward. Today's October 22nd. Let's see how these levels work. And look. Now I'm not making this up. Look, it's following the levels as promised. Do you see it? And I'm pretty sure the EMA is here. You put your 9 EMA or whatever you guys use. It's on the downside. See that? Super simple. Makes it more easier. Look at that. Rejection right there is holding. Now if you see a red candle, a rejection, shooting star or something, you get in again. Below 135.50, you can get into puts. See, it's losing power. We want to see how it holds. Okay, nice. It's holding a little bit. Want to see how that works. Okay, we're clear on supply. So maybe you don't want to trade here and swing overnight. This is already pre-market because it might dump. We want to get over it in order to see that that's a good level of demand. And look what happens the next day. Right at the open. It dumps and look, shooting star candle right off the key level with the EMA. Dropped. So you could hold it and all the way that you have a chance to go all the way to 129 again, right? 136, get a target of 130. A couple contracts, maybe a week off, and then you could just play that. Take some profits here because you see that it's trying to reverse. Profits, and then re-enter again and it rebounces out that EMA. There you go. Get in again. Your stop loss will be above that level, and then you could probably hold some runners because it's still below our supply and it's below here, so you could hold probably like a swing, a nice little swing, maybe one contract or two, because it wasn't that sure yet. And then this already market close, we could drop. And there you go. See, stayed in range. It still hasn't passed that supply level. You want it to pass. You still want it to pass, and there you go. It broke down. This did a nice flush all the way back to the demand. See that? Look at that big move. That's why I don't like trading when it's inside this zone, this demand area, this supply area. Look what happens. It played around, chopped with everyone out, and there you go. It flushed straight down from 137 all the way to 131. So let's fast forward. Let's keep going. Let's go to today. This is November 3rd. And look what happened. Today is November 3rd. Why did it bounce? See that? You could see why it bounced. Right off the man. And I did get a red. I got puts on it. I'm swinging some puts because of the supply zone. So I have some puts and I have potential downside to 129. The market has been rejecting this area one time, two times, like 2 days here. And we could still come back up and retest that supply level at 136 and drop down straight again to 129 and keep going, right? So far, what I do have using, just by using those levels and actually using the patterns, you could see that here it broke out of a trend. See that it broke out of a trend and is rejecting. It came back to retouch, rejected it off right at the 4-hour level, rejected with a shooting star. We could have potential flush all the way to 129.85, or maybe just keep going downside all the way to 118 because of Powell's speech. He gave us that he was going to raise the BPS by 0.75, so that is bad news. Maybe there was just a easy scare buy off, just to hedging that people were doing, institutionals, hedge funds, whatever's, and there you go. We got this push off today. But the thing is that even without seeing that, we could already seen and planned it, because this is a demand level, and look how it held on pre-market. Pre-market, it went up, back up. Then when the market opened, it went up, but it didn't actually kept going back to 133.02. It held it, but then it held that demand zone. Yeah, it is a $3 miss, right? Maybe through 129 or 126. But the thing is that once you know it enters here, this becomes our supply. And guess what happens? It could have another flush this big all the way down to like how exactly happened here, right? Could reject it and go straight down all the way to 119 or to 118. That's how I use it. Remember, we go to the daily, get your supply and demand levels there. And that's really all I do. Not that crazy. Just remember how we watched the video. And yeah, this is for trading view. The thing is that this is called the volume profile fixed range. And if you guys have the paid one, you could just easily use the other one, which is VRPR, which is volume visible range volume profile. And this one already shows you it has it like this, right? I should change the color, but it's the same thing. It's really the same thing. It's just that this one moves by the range that is seeing. So if I move it here, it'll start moving here, right? So I just want this little area. That's why it's giving me that volume from here. And even shows you the gaps. Look, empty gap here, all the way here. This is where it starts, and you see that it gives you the gap fill from 145 to 149. Empty volume, really low volume decreasing. If it breaks up that 149, we go all the way up just by looking at these levels. Look, all the way up here. From here it starts, go up there. You could do another supply and demand there, right? Another one, supply and demand here. And then look how those levels work. We turn on our thing and look how it works. See that? Perfect, nice, smooth action. By seeing the levels before, look at that. Look. See, perfect. Bounces off, goes straight to the next level. Drops down, rejects. This was our supply. Smooth levels, smooth action. And just by waiting a couple contracts, 3 or 4 contracts, you hold them and it hits your target. 300% move, 400% move, and you will risk less and have a nice move during the day. While everybody else is looking at every other stuff just by looking at price action, because that's how this market moves. Okay, guys, I wanted to say there was a quick video, and this really helps, especially for small accounts. Just wait for levels, and trust me, it's gonna. You only need 1 contract or 2, by like a week or 2 weeks off. For Fridays, I don't play 0 DTE. I like playing, especially when it's close to supply. I would like to play next week's because we could have a big drop tomorrow, like how I showed you guys here. We could have a nasty drop on Friday. Tomorrow's Friday. Come back, maybe it could come back up a little bit and reject, and then flush and just keep going to maybe in 2 weeks. You know, so if I get a week out, maybe we could see here 125, 123, but there would be like 1,000% move. 2 weeks out, maybe all the way to 118. We could go there. We can, maybe we can't. But the point is that we do know where our supply is at, where sellers are in, and they're not interested on bringing the stock up above 140. They just sell it off here and they take their profits. And people that are doing that are the bigger people, more money, Wall Street, institutionals, people that are buying shares. Anyone that's doing this, all the investors, traders, they're doing this. That's what the big dogs are looking at. Alright, you guys, so if you guys enjoy, and I'll show you guys a Thinkorswim on another video. But yeah, see you guys Friday.